Hi, it's Rob again. I wanted to share with you some information. So I was at the grocery store shopping the other day. The Oregon Dungeness crab is finally available in the grocery store, and here in Portland, Oregon, that's one of my favorite things. But the person actually asked me and said, how are home prices affected by rising interest rates? So I thought I'd do a little research, and I came up with a bunch of information, and I came up with this chart that I'm going to leave up here for a few minutes for you to look at. And I thought it was very fascinating. So I'm going to put my glasses on to read this one. But basically, as you can see on that chart, going from the 2000s to present, we can see that interest rates were higher, and that then, other than during the recession, where house prices dropped quite a bit, interest rates really haven't affected house sales very much at all. Now, I've heard things like for every 1% an increase in rates, you lose about 10% of home buyers. And obviously that's a problem, right? So if we lose our first-time home buyers, then those people, if they don't buy the first home, then those people who are selling the first home won't buy the second home, that those people want to buy the bigger home or a vacation home or something like that. So it does affect things going up and down the line. But the reality is, if we look at this chart, we can see that that tends to be not the case too much with small increases in interest rates. So the experts are saying there should be no depreciation in houses due to rising interest rates. And especially with the predictions, if you see this chart right up here, you can see the predictions aren't for massive increases in rates. As I record this in late 2021, I think it's very fair to assume that rates are going up. The Fed's talked about raising them 3 times next year. Of course, that's short-term interest rates, which don't necessarily affect mortgage rates, but I think it's fair to see that mortgage rates are going to go up some. This prediction on that chart I just showed you shows 3.5% average prediction. My personal prediction is we're looking more like 3.75, maybe even as much as 4% increase in rates in 2022. So what does that really mean to you? Well, a couple of things. So basically, don't be nervous about interest rates. Compared to past decades, it's extremely cheap compared to where, like even the 2000s. This chart right up here, you can see in the 2000s, the average interest rate was around 6.09%. We won't even talk about the 80s and 90s, but in the 2000s, which wasn't very far away. So an increase from 3%-ish today to maybe 3.75%, maybe 4%, maybe 3.5% a year from today isn't going to make that much difference in somebody's payment in a sense where it's going to stop them from buying a house, especially at a time where wages are increasing as well. But by the way, if you like my videos, please click on subscribe. And if you're thinking, gosh, I know someone that would like this, please share it with them. I'd love it if more and more people would subscribe to these. And thank you for watching my videos. I really appreciate it. And if you've got any questions, reach out to me.